Nothing makes sense these days. It's like bizarro land where, whatever is logical, the opposite happens. But, obviously, the market is starting to look forward to future Fed easing again. And that's why, the stock market went up. Bad news is good news in this backwards world sometimes. When you look at the dollar index, what you're looking at is the dollar relative to a basket of 6 other debt-based fiat currencies. So there's a basket of 6 currencies. It's measured that basket is most heavily weighted towards the euro. You got the Japanese yen in there, the British pound. And if you've got 6 currencies that are all falling and losing purchasing power, but the dollar just happens to be losing purchasing power at a slower rate, it gives the perception of relative strength, but it's still losing purchasing power. It's being debased. It's just you're measuring it against other falling debt-based fiat currencies. When you measure it against hard assets, the dollar is losing purchasing power and it's going down. So I think about the dollar index as like a headwind or a tailwind. The metals and commodities can rally in unison with a rising dollar, just like they have there was a period for the last couple months. It just means that you've got a headwind. So it's not like there's a perfect inverse correlation between the dollar and metals and commodities. The volatility we've seen in the last few months, I think, is only going to be amplified in both directions across all markets. So prepare for a volatility. But, the overall macro trends are going to be inflationary with quick deflationary impulses along the way. So we have to be prepared for that. There's going to be sharp pullbacks. But the overall trend is towards inflation. And I think the smart thing to do is position yourself in things that will benefit from that inflation, because inflation transfers wealth. From people who have paper assets to those with hard tangible assets. And silver, uranium, gold, platinum, battery metals, things like that stand to benefit the most in the coming years in this kind of environment, as long as you can stomach that volatility. The last several thousand years of human history are any guide. Silver and gold are the prime beneficiaries of this exact environment. It's volatile. The majority of the move tends to happen in the last portion of the time, and that frustrates a lot of people. If you go back to the 1970s bull market in metals, where it was highly inflationary, very similar environment that we have now, stagflation, slow economic growth, a lot of inflation. The metals did really well in that decade, but there was a couple-year period where silver actually fell by 50%. I think it was 1978, before rallying, several 100% in a period of, just a handful of months. So the vast majority of the move comes at the end of the time, and that requires conviction in the fundamental thesis. I use technicals to tell me when to buy and sell, but really it's the fundamentals that tell me what to buy. And I think without having a firm grasp of the fundamentals, it can be easy to be shaken loose. Unfortunately, it's the retail investor who usually sells at the exact wrong time. And the bottom line is the Fed is trapped. Other central banks are trapped. There's no solution to these problems. They're going to have to revert back to more money printing on steroids like we haven't seen before. Each stimulus package has to be bigger and bigger and bigger than the previous one in order to kick this can down the road, unless they want to have implosion of the economy sooner. And they don't want that to happen on their watch. They just want to kick the can down the road so the blame falls on someone else. A couple things about there. You mentioned the manipulation, and one thing I track every single week very closely is the commitment of traders report. That's where you can tell how the big banks are positioned, and not surprisingly, they were positioned for this pullback in metals. They were heavily short gold and silver, and then what happens is as price pulls back, they cover their shorts, and once it's a wash, rinse, repeat cycle. And the encouraging thing is we're getting closer to a spot where is typically coincident with lows in the metals. So I don't think we've got much further to the downside to go. But as far as a currency reset, the natural order of things, if this were to play out to its natural conclusion, would be for a complete collapse of the currency. That's where this would happen. But I think you and I would agree that they're probably going to roll out some kind of new system beforehand, before it goes to zero. They're probably not just going to sit there and watch the dollar go to zero. And that's probably going to involve central bank digital currencies, loss of our freedoms and liberties and all those kind of things. They're going to do that. The question is, how successful will they be, and who are going to be the winners and losers? I call it every 40 years or so, the rules of the game change. And I think the global monetary system, the rules are about to change. Whether it's in the next few months or a couple of years, I don't know. I think it's sooner rather than later. But the rules of the game are going to change. They've got a plan. And probably your average retail person they don't have their best interest in heart. I think about it, it's just a math problem. of the furthest this could possibly go, and it can't even go that far, is we're approaching a point where the interest on the debt, excuse me, consumes 100% of federal tax receipts. So if all of our tax dollars go to paying interest on the debt, obviously that's unsustainable, or something has to break before we get to that point.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race, you're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dahn, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I intend, how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dahn.